you, Steve, because we have seen a 1,000% increase in Bitcoin over the last year alone. At this point, why would somebody not want to jump on board that bandwagon?
Well, that's exactly what I think is happening. It's such a huge rate of price increase. People are looking at it and saying, I've got to be there. The entry cost is certainly less than buying a house and hoping the house might appreciate, so people are diving in because the price is rising. But that's one of the definitions of a bubble.
Max, record figures for Bitcoin. Isn't this a point, though, at which people are going to start cashing in? Aren't we going to see a slump?
Well, there's been volatility in the price of Bitcoin for sure, but it is increasingly being recognized as both a store of value and a means of exchange. And remember, there are hundreds of trillions of dollars worth of fiat money out there that is at risk of imploding, driven by the U.S. dollar, which is in an unmistakable bubble. Bitcoin's not in a bubble. The U.S. dollar's in a bubble. The fiat currency world is in a bubble.
Disagree.
Stocks and bonds, you could argue, are in a bubble. Something that's not in a bubble would be Bitcoin. You've got the dollar that is crashing in a hyperinflationary crash against Bitcoin.
I just want to pick up on what Steve said.
Max.
Sorry, go ahead, Steve.
It's total semantics. I mean, if Bitcoin didn't exist, you wouldn't be able to call the US dollar hyperinflationary. The US dollar is maintaining its value with the inflation rate running about 2% per annum. Bitcoin is running at the moment in terms of today's increase, 10% in one day. Now, that is, in 1 week, that means it will double. In 2 weeks, if it keeps up, it'll be 4 times. For 3 weeks, 8 times, etc., etc. It's like the old chessboard. That simply can't keep on going. And I disagree that people are using it for transactions. This is the flaw. It's a brilliant way of increasing your value. It's a store of value, sure, at the moment, but you'd be a madman to use it for transactions. If you use, well, I imagine you've got something like about 1,000 Bitcoin there, Max, and good luck to you. But if you'd used those 1,000 Bitcoin a year ago to buy a house, you could have bought a nice $750,000 house in San Jose. Now you could buy a $10 million mansion in San Jose. You'd be a fool to buy anything, and I'm hearing people refer to them now as not cryptocurrencies but cryptocurrencies because they intend holding them until they die. That is not money.
Max, you're biting your tongue. Go ahead.
Well, what Steve misses is the timeline what we're talking about here and the replacement of fiat money by cryptocurrencies and the time it takes for this to happen. It's true that the price has been compounding at about 1% per day, but we're entering into a period of transition where fiat money is being effectively replaced with cryptocurrency, and we will start to see some of the things that Steve doesn't like about cryptocurrency, like the volatility, start to even out when the price gets closer to $100,000 per coin. At that point, you're going to see less volatility. You'll see fiat money being put aside and cryptocurrency embraced. It's already the number 25 biggest reserve currency in the world, Bitcoin. It's heading into the top 10. It'll soon be the biggest crypto reserve currency in the world. You've got sovereign wealth funds like Abu Dhabi now buying Bitcoin. You've got Russia and China now and Japan actively buying Bitcoin because they see that the fiat bubble is bursting. And again, the U.S. dollar is collapsing against Bitcoin. This is a paradigm shift. Steve is an economist, and he admittedly says he knows nothing about cryptocurrency. He's not a technologist, and he doesn't have any background in trading. So I can understand why Joseph Stiglitz came out today practically crying, big fat tears. He said, oh my God, the government's not involved in Bitcoin. How will we survive? Well, Joe Stiglitz, get out of the way. You're an old guy with old views. They're no longer relevant, and this is the new paradigm. This is the new economy, and Steve King, quite frankly, is not even qualified to talk on the subject.
Do you know, Max, I wish Steve could hear that. I'm sad to say I think we've lost the link with Steve, but we'll continue. I'll try and challenge you a bit. I want to pick up on something.
He's running away in fear because he knows I'm dead right. And he said total paradigm is shattered, and he's probably out there licking his wounds already.
Well, Max, I'm going to defend.
Goes up against an online PhD economist. They can't hold a candle.
I'm going to defend Steve's argument, Max. He said a few moments ago that, you know, you talked about store of value or the fact it's usable. Isn't there a really strong argument there that it's being used speculatively as a store of value, but actually, where can you actually use your Bitcoin? There's not too many places, is there? Come on, that you can actually spend it. And isn't there a danger when people realize that they'll panic and sell their store of value?
Well, I think it's not so much.
Well, sorry, Steve, I'm just asking Max.
Okay.
Good to have you back, by the way.
Well, to answer the question, there are hundreds of thousands of transactions now a day, hundreds of thousands of merchants accept Bitcoin. The real estate market is being upended by Bitcoin. You can buy high-end properties with Bitcoin, yachts and properties and things of this nature. It's trickling down into the middle classes. But again, the timeline here has to be considered. The travel from being a store of value to a means of exchange is going to take another few years, and the price will get up to that $100,000 per coin level, and then it'll be much more useful as a means of exchange. The scaling that's going into it now is being implemented as we speak. The scaling debate is still raging, and these things are being resolved. It's only 7 or 8 years old, and yet, again, it's number 25 in the world reserve currency. It's moving up to number 10. Okay, this is the new paradigm. Those who are arguing against it would argue against the printing press when Gutenberg first introduced it. They would argue against the airplane when the Wright brothers first introduced it. You cannot fight the fact that this is more efficient, it's a greater store of value, it's great for transactions, and it's putting the fiat money world out of business. The Jamie Dimons, the Lloyd Blankfeins are going to be dead.
Okay, Max, let's give Steve a chance to respond. I just want to ask you, preempting what you say, Steve, Max makes the point this is the future, it's new technology, and decentralised, that's the key. That's what people want. They don't want bail-ins, they don't want governments stealing their money when they're short on cash. Isn't this the future, and isn't what, more importantly, what people want?
That's potentially what's going to happen with these cryptocurrencies. They are something which bypasses the need for a so-called trusted third party, when of course nobody trusts the banks anymore. And that was the original motivation for forming Bitcoin. But my point is that it can't combine the answer yes to two questions simultaneously. It can't keep on appreciating, I guess, and be used for transactions, because even though you can buy all those things with it, you'd be an idiot to buy those things now, because if you wait 10 weeks, you can buy twice as many or 3 times as many. So its price has to stabilise. Now, my worry is when it stabilises, what will happen to that price? I don't think it's going to necessarily reach the stratosphere at $100,000 and then stay there. If you get to the stage where the only returns you're getting out of Bitcoin mining are the transactions, then I think the price has to fall dramatically. And of course, there are other elements being added to it. Things like the Lightning Network are turning up inside there, so there's plenty of developments to come. But I simply don't believe that it is, at the moment, two things. It is one thing, and that is a store of value. You'd be an idiot to use it for transactions right now, and I hope Max agrees with me on that front.
Well, we already know that Max is going to be buying a yacht. He said that's one of the things you can buy. I just want to stay with you, Steve, just because Max spoke a lot in your absence when we lost the line. And I just want to ask you about what's happening in Russia, because we've heard members of the Russian Central Bank, I think it was the deputy governor, saying they're going to try and block people from buying Bitcoin on websites, but at the same time, they're starting to push the crypto ruble. So are these the same things or different? What's happening?
They're different. I mean, the whole idea of blockchain is a really innovative piece of technology. You can actually have blockchains which are actually live contracts that are executing as programs inside part of the blockchain. You have things like Ethereum, which I'm not an expert in any of these cryptocurrencies, by the way, but I'm looking at the technology and understanding why people have brought them in. So something like a cryptocurrency may turn up. I know the Bank of England is looking at a cryptocurrency where it would create crypto bank accounts for everybody in England, which I would see as quite a positive development. So there's all these sorts of things. You know, I'm quite in favour of the aeroplane, Max. I've caught a few.
Okay, let's come back to Max. He wants to answer on this, and I just want to know, Max, are the governments trying to copy Bitcoin here? What's happening?
Well, first of all, I am an expert in this field because I invented in 1996 the virtual specialist patented virtual currency and trading of virtual securities, and which sold eventually to Cantor Fitzgerald for many, many, many millions of dollars. I'm considered to be one of the foremost experts in this field. So I am an expert. When Stephen was offline and he came back, he made the mistaken assumption that this would be crazy for anyone to use it in transactions. He didn't understand here when I was talking about the fact that this is a process. It takes a number of years. It will stabilize at a much higher price, I think at $100,000 per coin, and that's per the protocol. So for somebody who doesn't understand the technology, admittedly, as Steve has said, there are many dimensions to the protocol that it gives it the lifespan to go to battle with the fiat money system, using as one of its weapons the game theory that's inherited in this protocol, the Nash equilibrium that is distributed in the various aspects of the technology, whether it's the SHA-256 hashing algorithm, the rate at which the coins are diminished for the rewards, the rate at which the coins are
Max, I apologise for interrupting you,
That's
just because
all part of the
we haven't got
genius.
much time left, and I want to squeeze in a couple of quick questions if I can, so if we can keep your answers brief, it would be great. And Max, I want to ask ask you, you know, the transaction times, they're getting slower and slower, and we're now seeing these split-offs. So we've got BitCash, BitGold. Doesn't that not suggest that Bitcoin's struggling if they're having to do spin-offs that work better?
Well, Neil, first of all, to get back to my point, this is a process where the transactions or means of exchange are coming in later at a higher price, but there are off-chain solutions right now that can be done. There's another cryptocurrency called Dash that does instant transactions. There are 5 or 6 big cryptocurrencies along with Bitcoin that make up this market to do battle with the $5 trillion per day fiat money US dollar forex market that's imploding in real time. Once again, the US dollar is engaged in a hyperinflationary collapse against Bitcoin at this moment.
And Steve, you know, there will be some people who think this is great, I need to invest, but we have to be wary that this could crash, couldn't it? What are the dangers for investors at this point?
Well, to me, there are 2 functions for Bitcoin. One is a dramatically increasing store of value. The other is using it for transactions. With the increase in value, it's got an enormous increase in energy consumption. I believe the amount of energy used right now to mine Bitcoin is roughly the energy consumption of Ireland. So there's all sorts of things which have to be reduced in the case of Bitcoin. And I think the energy consumption is drastically reduced and you just make money out of the transactions. I can't see this high price being maintained. I can see it stabilizing, but whether it can stabilize at $100,000 once it's used specifically for transactions and not for appreciation, I don't think that's feasible. I could be wrong. I'm not saying I'm an expert on this area, as I told Max beforehand, but the combination of massive appreciation and you'd be totally unwise to use it in transactions right now because of the amount of your value you're losing given its rate of appreciation. And once the rate of appreciation stops, what's the value? I believe it could be well below what it is now.
Okay, and I just want to quickly come back to you, Max, for the final word. And I also want to touch upon what I said previously. We're getting these spin-offs, BitCash, BitGold. Blockchain's the real beauty, isn't it, behind Bitcoin, the technology. Is there a danger we'll see another cryptocurrency coming in using the same technology that will be better?
Not really, because Bitcoin is unique. And to answer 2 questions at the same time, you have gold as a case study. Gold is used, takes a lot of energy to produce gold. Gold is used as a means of exchange as well as a store of value. It's been around for quite some time. Bitcoin is gold 2.0. It does the same function of gold. It takes a lot of energy to create a Bitcoin, that's true, just like it takes energy to create gold. But the unique attributes of gold being number 79 on the periodic table and everything that comes with that makes it, according to Isaac Newton and Aristotle, the perfect form of money. The way that the SHA-256 protocol, the proof of work, and everything that's involved in the Bitcoin protocol makes it the perfect cryptocurrency. That is why it's taking over the way it is. There are several others out there that do similar things that are also doing well, but we also have silver, we also have bronze, we also have Modigliani's, we also have other collectibles, we also have other stores of value. It doesn't discredit the fact that Bitcoin is still the mother lode. It's still taking over the global finance in this way. It's putting fiat money out of business, and the bankers on Wall Street are running scared. Jamie Dimon is literally peeing in his pants at this point because he knows he's going to be out of a job in 5 years. We don't need the Jamie Dimons of the world ripping us off. We don't need Wells Fargo stealing money out of accounts. We don't need HSBC funding drug lords in Mexico to the tune of billions of dollars. We don't need those bad actors in society. And Bitcoin gets rid of all those financial terrorists. And it's about time somebody stood up and did battle, and because the government's not doing it, the academics aren't doing it, so we have Bitcoin to do it.
Okay, and given that was such a beautiful but quite lengthy oration, I'll give the final word to you, Steve. What would you want to say to people about Bitcoin? The rate at which it's growing right now simply can't be sustained for 2 reasons. That rate of appreciation is like the old chessboard. Go from 1 grain of rice to 2 to 3 to 2 to 4 to 8 to 16. That can't be maintained, so the rate of increase has to drop. And secondly, the energy consumptions are so enormous that if we continue the energy consumption, it'll be banned because of its impact on carbon, the level of carbon in the atmosphere. If it doesn't continue, then I think its price should fall. Okay, it's been a great debate, a wonderful conversation. I hope people have gleaned something from both sides of the argument. Max Keiser, my guest, host of the Keiser Report. You can tune into that if you want to know more about cryptocurrencies in general and fintech. Looking forward to that yacht if you haven't bought it already. And also Steve Keen, Professor of Economics and the world's first crowdfunded economist. So very high-tech himself. Thank you, gentlemen. Let's talk sport now. The International Olympic Committee's handed life bans to 3 more Russian athletes. The move comes less than 3 months